Okay, everybody, here we go. It is me, Gregory Mannarino. It is Tuesday, April 25th, 2023. Are you watching what I hope you are watching? The 10-year yield this morning has dropped significantly, and the relative strength of the dollar is higher. Stock futures are lower. What does this tell us? Just by looking at that. Again, consider this. 10-year yield dropped. That means cash is going into the debt market. You got this knee-jerk higher in the dollar, okay? Stock futures lower. Looks to me like a fear trade starting, people. A fear trade starting. What does that mean in the grander scheme of things? Well, over the past few weeks, I've been explaining this market looks toppy, and I'm looking for a spot to get short. That day may be today. I'm not sure yet. I want to see how the open plays out. Trading doesn't start for about 45 minutes from the time I am doing this video blog. If in fact I do short this market starting today, I will let all of you know. It will be posted in my newsletter. Link in the description of this video here. Okay, so let's keep track of that. That's kind of interesting. What else is going on here today? Silver right now is getting hammered. Gold relatively flat. Cryptocurrency is under some pressure here. Crude oil under some pressure as well. But the real story, people, the real story is the debt market, the relative strength of the dollar, and the fact that we have stock futures under pressure right now. You know the Wall Street, adage here, sell in May, go away. Let's see if that proves to be true. Because if in fact I decide to short this market today. Now, first of all, let me just say this. I am not calling a permanent top for this market. I believe that it appears to me that this market has to give back. Now, what am I saying here? Again, I am not joining the choir of crash callers. I am saying that this market needs to drop 5%, 10%, something. I want to take advantage of that. You understand? If I do decide to short this market today, I will hold that position for several weeks. I am not expecting the market to go straight down if I decide again to short this market today. It always wavers around. I will, again, hold the position 3 to 4 weeks, something along those lines. And then when it turns around, I will look for an opportunity to get long here. And again, if you subscribe to my free newsletter, you will, of course, be made well aware of what I intend to do. So that's the story this morning right now with the market, how it seems to be playing out here. Now let's put a couple of other things together here. It looks like the last two videos I did really raised quite a stir here. I realize, believe me, that there are people on both sides of this situation, and that's how a market works. I'm talking about inflation versus deflation. Looking through the comments, and I do read the comments, it looks like a divide here. I do also realize that there's a couple of guys out here with some pretty big names calling for deflation. And, this is what I find a little bit somewhat, I guess, disturbing with regard to the deflation theme. It appears that a lot of you believe that if demand drops significantly, that's going to cause deflation. It's simply not true. Demand for products, just as an example, what has the Federal Reserve been doing for many months? Raising rates. It's supposed to somehow curtail demand, and inflation is miraculously going to drop. Hasn't worked here. It's not, I'm not saying it's that demand isn't an element here, but it's not the big driver of inflation. Inflation is driven mostly by one thing. That is, you have a situation where there is, central banks they've gone wild. They've been on a money creation binge since 2008, only to reinflate a housing bubble, reinflate a stock market bubble. But again, all of these extra bills are now beginning, this is just the beginning, to chase the same, or in this case, a lesser amount of goods. That's really the driver here. Okay, it's a money supply problem. And it's absolute mismanagement of the monetary system. And this is collectively what central banks have done. So we're just starting to see cash make its way since 2008 into the economy, now starting to chase, again, the same, or in this case, a lesser amount of goods. That's the driver. It's not so much demand. Look, they shut down the entire global economy. During COVID, they shut down the entire global economy. You want to talk about killing demand? Did prices drop at all? How about no, they didn't? I covered this recently in a piece I just put out, and I read to all of you right here on this blog. The stock market even went higher. So forget about anyone telling you about a dramatic drop in demand, and that's going to cause some miracle and and prices are going to fall here. It's just not going to happen. It just can't happen in this environment. And also consider what I'm telling you. You know the lag effect I spoke about? As cash makes its way through the economy, it takes a long time with money velocity, or the rate at which cash is moving through the world economy at a historic low or very close to it. We still have an environment where central banks are buying it all. Who's buying all the debt? Let me ask you, looking at the 10-year yield overnight, dropping the way that it did, you're watching the MMRI, we're at 219 MMRI, Mannarino Market Risk Indicator. Link in the description of this video, free to everybody. Who's buying it all? You think this is the regular guy, the regular girl, even institutions here? No, it's not. This is central banks. This is the Federal Reserve. And they're doing this to at least try to foster a mechanism where cash goes into the freaking bloated stock market, which really needs to drop. If you notice the phenomenon that we have here, okay, they're not allowing, if I short the market today, is Greg Mannarino taking a risk? Absolutely, I'm taking a risk. There's just no doubt about it here. What do we have? Again, a massive effort to keep this market propped up, to prevent any kind of a pullback. Normally, markets drop. You get a rise. You get a pullback to a retracement level, rise. You retrace, rise, you retrace. Period. That's how it works. And in this environment, look, this is not a simple thing. Okay, you got to consider so many facets when you're looking at this market, and understanding what's underneath it all, what the drivers are, what central banks are trying to do, and nobody is more versed in this than you if you follow this blog. And you're not going to change anything here, people. Look, I believe sincerely, if you follow this blog, if you have an understanding of what's happening, no one's in a better spot than you. Bidding against the debt, becoming your own central bank. I've said this since day one. Holding hard assets, physical gold, more specifically silver, the most undervalued asset in the world, in my view here. Eventually, this debt market is going to implode again with such ferocity that people aren't going to, their heads are going to spin around like The Exorcist. I've told you this a million times. That's going to melt down global stock markets. Cash is going to just move into commodities. And yes, I also believe cryptocurrencies as well. This drop that we've seen lately in cryptos, this is a long time coming as well. If you recall, we bottomed out. Bitcoin was around, 17-ish thousand? We're now at 27,000. You can't go up, have a move like that without a drop. It just can't happen, okay? Like I said, you get these rises, then you drop to, you retrace, a rise, then you retrace. And with cryptos, it's extremely volatile. We're talking about an asset class that is relatively new in the grand scheme of things. But again, you know all this. I keep all of you way ahead of the curve. That is my job, is to keep you ahead of the curve, keep you understanding on keep you in the know as to what's going on here, right? So that's the setup this morning. Looks like a fear trade to me. And depending on what the charts tell me, and I haven't even had a chance to look at them yet, so I may be shorting this market for several weeks, okay? If that happens, I promise to let you all know. Immediately, it will go right out in my newsletter. I'll tell you what I'm buying exactly, okay? I'm looking to buy puts on ticker SPY, the exchange traded fund that tracks the S&P 500. You understand? All right, people, that's it for this morning. I hope this has been informative for you. You're getting something out of these videos. If that's the truth, please, that thumbs up is so valuable. It gets this video out there and people get to see it. All right, that's number one. Number two, please comment. I want to hear from you. Where did I get this video right? Where did I get this video wrong? If you are in the camp of deflation, I get it. I get why you would think that. But let's detail some of these and maybe we'll cover a little more of this. If you're on the same camp as me, which we're going to see much higher inflation, well, I think that's almost a no-brainer here, honestly, people. So comment, thumbs up, share the video. I will see all of you later, 1:05 p.m. Pacific Standard Time. All right? That's all.